Hi everyone, Aaron Ninness, Denver, Colorado, and your mortgage professional. Here, another episode of How Much Can I Afford? Today's episode, we're talking about HOAs. HOAs are homeowner associations. Basically, it is where properties have come together and said, we would like to have some type of governing body over our subdivision, community, building, what have you, that makes sure that people are sticking to the same general rules. Now, these could be as simple as someone living in a home where an HOA says, you can't have a pink house. That's a type of HOA. Or make sure your lawn's mowed or the weeds are pulled, etc. There's then HOAs for townhomes or condos where not only do they cover all those items, but they also handle things like maintenance, snow removal, trash, paying the water, sewer, landscaping, etc. So HOAs are going to be different depending on the type of home you buy. But here's the big thing that I always like to stress on HOAs. HOAs are part of the total housing payment. So when you go look at homes, it's important to recognize that if you are approved for a $300,000 house, and that was based on, let's just say, principal, interest, taxes, and insurance, that portion, and mortgage insurance, if applicable, and that's what is going into it. And then you go and look at a house, and it's got an HOA of $100 a month because there's a pool or something part of the community. That is going to affect whether or not you actually can afford that home. What I mean is if the top end you're looking at is $300,000 with principal, interest, taxes, insurance, all those items, but your loan officer or your lender didn't realize that you were going to have an HOA on there, that $100 may be too much of a payment. In general, a good rule of thumb is $50 of HOA is equal to $10,000 of buying power. Quick example would be in that same $100 HOA for a $300,000 home, you might want to look at a $280,000 home because of the $100 HOA, and then you'd be smack dab on the right payment. We see this commonly with someone who is out more, not looking at houses, but more so looking at single family homes, and then they find a townhome that fits. Okay, so you're out looking at $300,000 homes, and then you come across a beautiful townhome, $285,000, and you're like, I could get approved to this, right? Well, if that HOA is $250,000 or $250 a month rather, that $250 is way more than the $15,000 difference, right? So just because you're $15,000 under your budget doesn't mean that you're now under budget. You have this $250 HOA to throw into the mix. So knowing what you have for HOA approval and then a single family no HOA approval is very important. Now keep in mind too, your HOA is going to cover additional things other than just landscaping. Some of the things that differ would be homeowners insurance. If the master policy, and most HOAs do have a master policy, covers the exterior of the property, chances are your insurance policy only needs to cover the interior of the home, the contents or personal property of the home. This is things like your cabinets, your carpeting, and even things like drywall and fixtures in the home. But that's really all you're insuring. The structure could be insured by just the master policy. So knowing what they cover could also help eliminate some other items inside your monthly payment. Usually if you just need contents insurance, the payment's going to be much less than having to insure an entire building. So those are some of those variances. So as you go out there, make sure you know if you're looking at properties with an HOA or without an HOA and how that HOA fee is going to affect your specific qualifications. Otherwise, happy house hunting. Hope you enjoyed another episode, and obviously keep watching the series to learn more. If you haven't had a chance, make sure you subscribe. Give me a like if you can, and we'll see you on another episode.